top of the class on the road, hey, and it's time to run it up, yeah, you know, yeah. Mask down, put the pedal to the floor, yeah. On the road, here we go, here we go.
What is going on, everybody? Welcome back to the channel. In today's video, I want to do something a little bit different. I want to go ahead and take a little bit more of a zoomed out view on Bitcoin. And a main reason why I wanted to make this video is my original prediction for the bottom of this bear market is essentially here. And I think it's just appropriate to check in on Bitcoin and kind of try to see if our original prediction still stands true and it could potentially be the bottom, or if we still have some more pain to come down and make lower lows. I know this is the million-dollar question that everybody is asking. So I just wanted to break it down on the charts. I've marked out all the halvings, all the bottoms, and I measured out a bunch of different metrics. These numbers are very, very interesting at the least. And there are three main things that I'm looking at that could potentially indicate that we have already bottomed out. Now, before I jump into it, I do want to make it very clear this is not a video saying that I am calling the bottom here right now. Granted, it may be the bottom, but as you guys know, if you watch the channel, we like to be prepared in any situation. So with our original prediction basically coming true right now, I just want to touch base with Bitcoin and kind of give you guys the bullish stuff and the bearish stuff. Without further ado, let's go ahead and jump into the charts so I can let you guys know these top three things that could indicate that we already have bottomed out. And again, I want to show you those really interesting numbers from the previous cycles that are starting to add up in our current cycle right now. Let's get into it. So here we are on the Bitcoin weekly chart, and right now I have everything turned off because I just wanted to make a nice clean chart. Now you will notice I have this gold line right here, this trend line. What this is a Ganfan level. It is the 1-1 Ganfan level, which according to the creator of the Ganfan or Gan theory is the most important level. And I got this Ganfan level from all the way back here. And this is basically what you get here. It's just a diagonal level of support. And you can see it's very important just because we've only been below this line very briefly right here back in 2015, as well as in March of 2020. But we are starting to break below it. We are further down below it now than we have ever been. We are closing more candles below it than we ever have. So it is an important level, and I just wanted to put it in there. But just to start off here, what I'm going to do is I'm going to turn on the halving dates. So what I've done here is I've marked previous halvings as well as the next halving coming up in 2024, because I think this gives you a good visual aid to what the cycles are. And again, as we measure things here in this video, you'll see how interesting some of these numbers are. So I'm going to go ahead and turn on these halving dates. And I'm also going to go ahead and turn on every bottom. We have the bottom in 2015. We have the bottom in 2018. In this video, we are going to be assuming that the first top here in our current cycle was the actual peak of this market. And just for argument's sake, we are going to be hypothetically assuming that we have essentially bottomed out for this bear cycle. So the first numbers I want to bring up are going to be the halving all the way to the bottom. So I wanted to see, how many days were between the halving and the bottom here in 2013, 2014. So let's go ahead and turn these numbers on. This is where things start to get interesting, guys, because a lot of people don't think that we've hit the bottom yet because we haven't been in this bear market for long enough. Now, that would be arguable if you are assuming your second top was your all-time high for this cycle. But if you guys have seen our false top theory video, you will know that there is actually a decent amount of evidence pointing towards the first top being the actual peak of this cycle. So for this video, we're going to be assuming that the first peak was the top. But I think a big argument people have is if you look at these numbers historically in this cycle here, the amount of days between the halving and the bottom of the market is about 777 days. And then in 2017, it took a similar amount of time, coming in at about 882 days. And right now we are coming in at about 763 days. pretty eerily similar to 777 days, if you ask me, and 882 days is not too far off. So when looking at this, it does seem that if this was our original top here in April of 2021, it does seem that enough time has gone by in this cycle for us to hit a bottom. So in my opinion, if this was the actual top of this market, there has been enough time from the halving to the bottom to have an entire bull market play out completely and find a bottom. Again, 763, 777, very close, and 882 not far off. Now, another thing I want to bring up here is the amount of days that it takes to reach the bottom from the all-time high. So here we go. You can see from our all-time high here in 2013 all the way to the bottom, it took about 413 days to bottom out from the all-time high in this cycle, right? In 2017, you can see from the all-time high all the way to the bottom took about 364 days, almost a year exactly. And in our current cycle right now, if you're measuring from the first top all the way to our hypothetical bottom here at 17.5, there was about 427 days. So again, very, very similar numbers. You have 427 days for this cycle, 364 days for this cycle, and 413 days for this cycle. Again, these numbers in the 2013-2014 cycle are matching very closely to our current cycle here. And another interesting quirk is that we had a double top in this cycle as well as a double top in this cycle. On the contrary, in 2017, we just had a blow off top. So it is interesting that these numbers are matching the 2013-2014 cycle even closer. Maybe they are just similar cycles. Like I said in the beginning of the video, my original prediction for the bottom of Bitcoin in this bear market was to bottom out in the mid to low 20s with a possible panic wick below that 200-week moving average to about 18K before, finding support and closing on top of that previous all-time high at about 1920K. Now, if we come over to our chart and we turn on our 2017 all-time high, you'll see that almost that exactly happened, right? We came down, we were in the mid to low 20s, we had a panic wick down when all that crazy stuff was happening in the market, and we wicked down to about 17.5, depending on which exchange you're looking at. We did wick down to about 17.5, close enough to 18K for my prediction. So again, another big reason for making this video is to kind of touch base on our original prediction because it's essentially happened. So if our original prediction is right, this right here, this wick down to 17.5 could potentially have been the bottom. Now, another thing to take note of here is that we don't ever really spend too much time below this gold gone fan level. And right here, you can see that we did dip below it for a short period of time before ripping right back above it and finding support on top of it. In 2017, you can see at the bottom of the cycle, we did not even come down and touch it. But during the March 2020 crash, you could see we wicked below it and then snapped right back up and closed right on the level right here. And if you come to our current cycle, you can see that we are pretty deep below this line and we have perfectly wicked below that all-time high and snapped back up and closed right above it. Now, this is very, very interesting, guys, for a bunch of reasons, but one of them being that I know a lot of people say that Bitcoin has never gone below a previous all-time high, and that is very true. We have never done that. Now, if you come back over to our 2013-2014 cycle, you can see that when we got our first top here and then our second top here, we did come down and we did retest the previous all-time high. Granted, this was not a previous cycle all-time high. This was in the same cycle, but we did come down and we did wick out right here and test that previous all-time high, and we did indeed hold it. Now, if I draw a line here, you guys can see we had our all-time high here, and then in the bear market, we did come down and test that all-time high, and that did indicate the bottom of that bear market. Again, we're comparing the 2013-2014 cycle to our current cycle. Couple things very similar. Double top on both of these cycles, And here we came down, tested that previous all-time high. I know it wasn't a previous cycle all-time high, but we wicked down and then came back up right above it. And if we come to our current cycle, you can see we had something very, very similar happen where we wicked below and then came right back up and held that previous all-time high. So you have all these time frames looking very similar between all of the cycles, but not only that, you do have your 2013, 2014 cycle looking very, very similar to our current cycle. And the fact that they were both double tops just makes it a little bit more interesting. So you have from the halving to the cycle bottoms being very, very similar, right? You're in that same ballpark. And you have the all-time high to the bottom taking almost the same exact amount of time when measuring it to this dip down to 17.5. And we also are closing above this previous all-time high, looking very similar to how we wicked down and then kind of bottomed out, testing that previous all-time high in 2015. So there's a lot of really, really interesting things here that could be indicating that 17.5 may have possibly been the bottom. Now, this is before you start mentioning, just the typical things that are indicating that we could have found at least a local bottom, like the weekly green dot that is called the bottom in the past. We now have a confirmed 2-week green dot, which has also called the bottoms in the past. And we have the weekly RSI very, very oversold, looking like it could be potentially finding at least a local bottom. So with all of these factors put together, and these numbers being so close to our original prediction for the bottom of this bear market, you do have to at least entertain the idea that 17.5 may have been the bottom. Now, again, I am not saying it's 100% the bottom, and there are some reasons for this to be the case. And one of those main reasons is the way that the macroeconomic situation is looking. Now, if the macroeconomics were not so shaky right now, I'd be a lot more comfortable calling the bottom here at 17.4 or 17.5. Although the charts can give you a really good insight to what is going to happen, sometimes when you have fundamental factors such as the macroeconomic environment, you can have something like a war or a pandemic. Things like this can cause a complete black swan event that the charts cannot predict, and we could eventually wind up coming down to make lower lows. Like I said, our original prediction was to bottom out in the mid to low 20s with a possible panic wick to 18K. But if you've been watching for a while, you will know that I'm not just going to stick to that prediction because that's what I believe and I'm sticking to my word. I mentioned that when we get down there, we will reassess the situation, and if we need to find lower targets, we can. And just to touch on that for a second, if we do wind up coming lower, which again, just based off of the macroeconomics, I am thinking that it could be possible to come down. Some lower targets that I would be looking for are very, very similar to what a lot of other people are thinking. Maybe we get a wick down to test, I would say between 14 and 10K are going to be the next targets that I'm watching. And something very, very interesting, just talking about those lower targets, is if you pull some volume all the way from the bottom of the bear market in 2017 to our current price action, you will notice from this entire range of price action, the point of control does come in at about $9,500, close enough to 10K for me. And because we are above the value area high here, and we have come down and are now testing the value area high, if we do break this level, which is very close to the 2017 all-time high, this white line right above the blue line, if we do break down below this level and start bearishly retesting these levels, it would be likely to revisit this point of control coming in at about $10,000. So that would be the argument for coming lower. It could make sense if we see the macroeconomics continue to get worse. But again, I think it's very important to realize a lot of these bottom signals that we're seeing, right? Again, the weekly green dot, the 2-week green dot, the fact that we're sitting on top of that all-time high, the fact that all of these measurements in time have been so close, and the fact that we had a double top in this current cycle and a double top in 2013, 2014, and the fact that these numbers mimic these numbers even closer than 2017 kind of makes me think maybe we see this cycle play out a lot more like 2013, 2014 than 2017. And if you want to go even further, we can go ahead and measure the time between the halving and the all-time highs, which are also eerily similar. Also, with the 2013-2014 cycle matching closer with our current cycle than 2017, just kind of keeping the consistency there. From the halving to the all-time high in the 2013-2014 cycle was about 364 days. In 2017, it was about 518 days, and in our current cycle here, it is about 336 days, right? So again, the 336 being a lot closer to 364 than 518, you see our current cycle mimicking that 2013-24 cycle even closer. So the question remains, are we going to come lower to those lower targets between about 14 and 10K? Or are we indeed seeing history repeat itself yet again very, very closely by sitting on top of these all-time highs with that little wick below that previous all-time high and then closing right above it? Or are we going to see price come back down, break this all-time high, and continue lower towards that point of control? And I know a lot of people right now are calling for a relief rally to about 30K, and I just want to show you guys, if we do get that relief rally to 30K, it would bring us to bearishly retest this 1-1 gone fan level, which could potentially, if we cannot break it, give us a harsh rejection down to lower lows. So guys, I think that's all I got for this video. Once again, my original prediction for the bottom of Bitcoin has essentially played out. And although I know everybody is very, very nervous about having a lower low come in, and it's starting to seem like that's what the herd is thinking. And a lot of times what the herd thinks is not what winds up happening. When you get a lot of people expecting lower lows, that's when Bitcoin just decides to turn around. And when everybody's screaming for a new all-time high, that's typically when you come down. So you want to keep that in mind. And the fact that we did get that prediction so close with that panic wick down to 17.5 instead of 18K, it was so close. The fact that we closed above that all-time high and we are now holding it as support does look very, very bottomy. So I just wanted to, touch base with Bitcoin, show the cycles, show these different measurements, how similar they have been. And that's kind of where we stand right now. If you're assuming the first top was the actual top, then these measurements are getting very close, if history is any indication, to a potential bottom. So I hope you guys enjoyed that video. I hope you learned something. I will be sharing this chart in our free Discord. So if you're not in our free Discord, definitely go ahead and check out the link down below. It's 100% free. I'm in there putting my TA. We have great traders in there. It's a community of people talking TA, talking trading all day, all night, learning from each other, sharing ideas, and you get a little bit of extra sauce from your boy Frankie Candles. So with all that being said, guys, that's all I got for this video. I'll see you in the next one. Frankie Candles out. Bing bong.
Here we go, yeah. At the top of the class on a roll, hey. And it's time to run it up, yeah, yeah. Mashed out, put the pedal to the floor, yeah.